And then the fourth difference is risk and profit sharing. Now, conventionally, if I want to get a house, I will go to my bank, I will ask for a mortgage. They will assess my background and my ability to do the repayment. And then if I do take that transaction and you get the house, if there happen to be a situation where I cannot repay, and this isn't based on negligence or misrepresentation, but rather maybe I'm laid off or I become ill and I'm in a position where I cannot pay back, and they even with a grace period, because I think most financial institutions give you about 3 months or 6 months depending on what their policy is, and you're still unable to pay it, what do conventional banks do? They will auction your house. They will take what is due to them, and by this time, it doesn't matter whether you get your money or not. It's all about them getting their money, and then you go at a loss. So this is exactly what happened in the 2008 financial crisis. You had the subprime mortgage problem. Somebody who is not supposed to be given a loan is given a loan because we're too greedy and we need to give that, give out the loan, and now they're unable to pay because of circumstances. The financial economy now in the country has fallen, and everybody starts defaulting on their loan. In Islamic finance, what you do is you share the profit and the risk. So as a bank, you go to your bank, you get a mortgage. The bank gives you the house as your renter, as your landlord. So you have a landlord-tenant agreement, not a lender-borrower agreement, which again just almost reeks and sounds of enslavement. And while you're given this, it's based on a contract called an ijara, or an operating lease. You get the house, you pay the principal and rent. What does this allow you to do? This allows you to buy back equity in your property. So what if a situation arises and you're unable to pay? The bank is incumbent, because you're partners in this transaction, to sell that property, to give you back what is due to you, or what you have invested insofar as equity is concerned. And if there is any loss to be taken, then the bank absorbs that. Why? Because your relationship here is your partners, not borrower lender, meaning that again it's very equitable and fair. So these are the four very distinct differences between conventional finance and Islamic finance. And a lot of people have now realized that this allows them to be able to transact in a way that is more in line with their conscience and with their faith.
For more great content, check out ummah.co.ke, and don't miss out by following us on Facebook and Twitter and subscribing on YouTube.